Welcome to readtheticker.com. Today we're going to have a quick overview of price architecture. Here in front of you, you have a standard run-of-the-mill steps to a deck. And underneath the steps you have this purple line which shows price action busting resistance, forming support as it steps up. This is how price moves over a period of time. It forms a base, has a markup period, forms another step, or what is known in Wyckoff world as stepping stone, does a bit of accumulation. Basically it's a build up of power for the next push up. Some players who had good information, had good analytical skills, decided to buy at the base. As it showed strength, other players decided to review their analysis of the stock or securities and realise, yes, it's worth getting into, so they push it up. And obviously a push-up, you see people who are short getting out, and it forms another base, and other people might consider whether they are going to add more, double their positions or accumulate. Some may have got out from the original base, but here we have another build-up of power to push higher. A step is a consolidation zone that allows the build-up of energy and power to be released, to be motivated to punch through resistance to go to the next step. So the architecture of price is base, stepping stone 1, stepping stone 2, stepping stone 3, with a push-up of markup through resistance as time goes on. Obviously, you want to watch out for when the steps break, when price falls too deep back into previous support. We want to watch out for price going too far high, because it can result in a buying climax where everyone decides to sell and no one decides to accumulate. So you really want to keep an eye on price architecture. The other point I'd like to note is that for the retail investor, when a stock forms a low, let's say this on the where my cursor is now, and a stock forms an ultimate high, you get an ultimate low and an ultimate high, it's highly unlikely the retail investor is going to score a buy and sell at the ultimate low, at the ultimate high. I know there's services out there with magical formulas and magic wands saying they can do this, but I guarantee you, out of a shot of 10 choices, they can't do it 10 out of 10. What it's more realistic is that a retail investor, and most fund managers, quite frankly, wait for a change in behaviour from the stock or security going down, see it start going up, and then buy around when you see E2 and E3. It continues up, and you see more accumulation with E5 and E6, and the selling would start around E2 or E3 over here. The odd small speculation might happen at E1, and a short might happen on E1 up here, but quite frankly, there's always a period where the stock shows its hand by a change of behaviour from selling to buying, and that's where it attracts the majority of investors once it's shown its hand. Just keep that in mind. Let's look at an example. Here we have the Apple chart. It is a weekly chart, and the red is for price down bars and the blue is for price up bars. And on the chart you see a stepping indicator formed off the Chandler bands. The upper one is the bullish step indicator, and the below one is the bearish step indicator. The bullish step indicator looks like it's working better because obviously the Apple trend is higher, and the bearish one does not look so good because the trend is higher and not lower. Now, the quick way to analyze the architecture of your price is to consider the strength and how well the steps have been formed. The first thing you want to note is you want to see the black line step up most of the time. You do not want to see the black line dip. You'd rather see the black line continue to rise. And minor dips, for example, here we've got a strong rise up here and a minor dip. Strong rise up and minor dip. You do not want to see sort of like two dips down. And here we want to grade our price action stepping. For example, here we've got price action markup. We've got a accumulation there, markup there, accumulation there, accumulation here. And we go up here, we have some price challenges. And once again, we get stepping formation continuing here. So the first thing to note is how to grade your price stepping action. First point is that if price is stepping higher and it is clear of the shaded area, this is a weekly chart, remember, that you would grade your architecture and price action as very strong. When price falls into the shaded area, especially for the first time and when it hasn't done, is that it's good, but requires proof for price continuation. So we've had a challenge to our stepping structure based on performance. We had a challenge that falls into there, and as you can see, the challenge was quickly met with a bounce back in, and it continued on. A more serious challenge happened here, and as you can see, it warranted dramatic proof to prove that it was going to continue on. We had a little bit of bounce here, but unfortunately it broke the black line, and we would have to put in our minds, say, unfortunately the stepping action here has confirmed as pretty poor, maybe even be busted. Now I wanted to make a note here, as I stated in the previous information, that is that most likely investors would have got after a change of behaviour in here, and they may have ridden it all the way up here, and I would think a challenge to the steps might have, oh, excuse me, profit taking zones are here, here, yeah. So a long trend up, you obviously missed the first 5%, and on a sell off you missed the first 5%. It's very very unlikely to actually sell at the peak and get to keep your money. So my point is that most investors would sort of see mark of a little bit of a drop and then realise that the trend is over. The other point I would like to note is that in the zone here, price entered the shaded zone with on strong volume. I would make a note, and sitting back here, remember how the stock was much loved by Apple investors and owning it till death do they depart and everything. Quite frankly, to get bullish back on the stock again, you want to see good evidence that it's going to recover from the fall. So you want to see strong price action, break out of here and go back above the blue line. But as it did not come and this bounce was weak and it continued to bust down the black line, you had to concede that the step action was busted. And as you can see, a lot of liquidation followed from after that. Now, the other important point to note in the stepping things is that yes, steps can be busted, but also those steps can be mended. They can carry on again. And here we had a little bottoming zone, and price did a little double bottom there, and actually using your Wyckoff logic and other cycle tools, you see that price smashed back up over the black line. As you can see, this is down here. It started actually, the actual bearish steps actually started to make some sense. But as you can see, it busted back in the shade. Remember the logic of price breaking the shade. You need proof that it's going to continue the trend. But here, the proof actually failed on the way down. It didn't go down, so it continued up. So it showed that because the proof failed on the short side, that the bearish side, so the bullish side would actually have more merit. There is a period of conflict. Here we have a period of conflict. Where if you were bearish and you're waiting for proof, maybe here, actually make that a bit wider, sorry. Period of conflict between the bullish and bearish steps is that if you're short, the proof should have come in here that this action was going to fail and charge down. You maybe got it back on a bounce and carry on, but the proof never came. And obviously the bullish steps continued on, and it's pretty much over for the bearish action right about here. The bearish steps pretty much failed there, and as you can see, we're off to the races as the bullish steps finally took over. Like I said before, is that a retail investor is unlikely to buy at the low and sell at the extreme low and sell at the extreme high. They have to see a change of behaviour. Or most people do, quite frankly, see a change of behaviour to prove that the trend is going to continue on. So before you, otherwise you're in high speculation mode. So that's pretty much a quick overview of understanding the steps and guiding through the architecture of stepping action. You want to grade your price action and steps, whether it's in a very strong or it's in a challenge mode and requires proof that the continuation is going to happen. So once again, we look at Apple and it's stepping higher. Obviously grade this is very strong, and any pullback, if it pulls back and does not penetrate the blue bars, that's just a standard stepping stone count or stepping stone period accumulation will most likely build up more strength. But what you want to watch for when is another type of environment when it smashes into this zone here. That is not a good idea to have it go smashing with strong volume into the shaded area. Okay, let's have a look around a few other examples. But Apple pretty much covers a trend, change of trend, and rejoining the trend. Here we have crude oil, and as you can understand, it's been in the news recently with its quite dramatic plunge down to $65. I want to note here that you can see quite a lot of conflict between the bullish steps and the bearish steps. As you can sort of see, is that you can't exactly say the bearish steps aren't working, and you can't exactly say the bullish steps aren't working. So the bias would have to be with the bullish steps, as they've been working the longest. As you can see, the stepping up is going along here. But once again, when price falls back into the shade zone, you require proof that it will continue its trend, and it's fallen several times in the shade zone. And what I mean by proof, you like a double bottom or a strong price action out with a test. Maybe a couple of 1 day. Here's a double bottom here. It's a bit hard to say that one, but it bounced, and this is proof here. Double bottom here, it carries on, and maybe it bounced, continued on there. But once again, it goes in the shaded zone here. It requires a lot of caution, but hits the black line, and you're pretty much not happy when that happens. So the proof never came, and it plunges. And as you can see, the short actually started working here. But as there is conflict in here, it's not the best chart to go hunting for shorts or longs, quite frankly. So there is an increased risk in this chart. So what would I be doing now, quite frankly, is on the way down, you would have to, if you're, wanting to re-enter positions here, you have to let this chart do some time to form a base or show, some sort of idea that it wants to go up or down. Let's have a look at another popular chart. Everyone looks at gold. You can't do much without looking at gold these days. Okay, here we got gold. And as you can see, the bullish weekly, they're all weekly charts by the way, we're stepping up nicely here. A couple of challenges in the shaded zone comes out. Here we have a challenge, but once again it's proved okay. But here we have another challenge, and the proof never came, and it falls smashing through the black line, and pretty much failed. So when you should get nervous when price falls into the shaded zone when it hasn't really been in there for a period of time. At the moment, we had a challenge to try to get the steps working a bullish again, but it failed. We're building a base here. Once again, we fall into the shaded zone, and quite frankly, we hit the black line, so that's not good. But we still need some proof that it's going to go higher, so we just have to be patient. Maybe get it above 120 to know that the steps are going to start forming again. Here we had a minor test, so this is a real challenge to the trend here, the bearish trend I should say, and maybe the steps might be forming again. As you can see on the bearish chart, just ended up being another great short. And as you can see on the bearish chart, actually short started to work here, and have worked all the way down, and it's still working. But if that's what we do, we're looking for stepping architecture for possible changes. But at the moment, we'd have to sort of say the trend is down, and not good when the black line's being tested. So we want to see some strength come in for the bull side with a change of behaviour, and obviously we know the Swiss vote is on this weekend. So, yep. So look, another one. Yeah. Energy. Now, we obviously know the crude oil price is going down. Energy stocks have taken a bit of a hammering. This is XLE of the spiders. Nice stepping formation. Here we had a bit of a challenge. Bit of a double bottom there. This is the weekly chart, so you would have seen on the daily chart a double bottom there. And it continues up. Very happy, very strong. The bearish chart steps don't work, because you can see the black line stepping up. Here, black line stepping up, so the bullish works. But here we get our challenge to our trend. Busts in the shaded area, right? And obviously busts the break line, so the shorts should start to work, and they actually do. There's no debate there. Quite frankly, it's smashed in the blue zone with quite a lot of strength. If you're a retail investor, you should have got it out around 95. And if you're in the mind to go short, you can see the shorts actually warming up about there. So there's the backline failed. This is a very strong trend, obviously. Here we have a period of confusion, and you have to, like as before, when you get a period of confusion in the stepping charts, you really have to let price action prove which way it's going, and we do that by challenges of the test support and resistance. For example, it breaks up here, out of the black line, comes back down, tests, goes up. Okay, and like I said before, it's gone into the bearish shaded zone. So if you wanted to go short, you need to make proof that it's going to go down. It hasn't never really busted down. You might have thought you had a chance here, but as you can sort of see, many penetrations back in the shaded zone shows weakness on the bearish side and bullishness on the bullish side. They use this indicator to pretty much guide trends between other stocks. Obviously, price action and tests and challenges to support and resistance are very critical here. But what we're looking for is to compare many stocks and which trends and are holding up well and which ones are stepping. Because when you have stepping price action, you have very good chances of entry and exit and making money, of course. One more. Priceline. Now this is a very strong stock, and as you can see, even though it had sharp corrections, 10-15% corrections, the bullish steps held its form pretty good. And you got to give some leeway to the trend. And at the moment, it's still going sideways. We've had a bit of a test of the black line. And we're just looking at the proof and see how well whether it's going to continue up. So when we need proof, we really are letting our analysis say, okay, you've gone to the shaded zone, prove to me that you're going higher. And I would say in this particular case here, it went into the shaded zone. The buy would be about here, and obviously it's not good when it takes out a lower low here. So we've got more sideways. Here we've had proof it comes out of some strength coming out of the shaded zone. Once again, it went back in. So we want to see it really hold up. So if it's going to go to 1400, it shouldn't go back down. But obviously, if you've got a different opinion, some shorts are working down there. That is the way to analyze stepping architecture with readtheticker.com. The stepping architecture is a tool used to support Wyckoff logic, because Wyckoff logic is a formation of a base, which is a cause, results in an effect, results in another step, another minor base, and results in another effect. So it's just another methodology to use analysis of cause and effect. Thanks for watching.